What's going on, everyone? Welcome back to the Courtside Financial Podcast. My name's Obi, and today we're diving into some interesting developments in the electric vehicle space. Look, I've been covering EV for some years now, and what we're seeing in 2025 is nothing short of revolutionary. We've got NIO expanding their offerings, XPeng's comeback story, and even BYD democratizing intelligent driving. So anyways, grab your coffee and let's break down what's happening in the electric vehicle landscape. As always, I'll try to keep my neo-bull tendencies in check and give you the objective analysis that you deserve. Let's start with some news from NIO. Their sub-brand Anvo is gearing up to launch their second model, the L90. So this is significant for several reasons. According to their president, L90, the L90 will be the brand's first flagship model. It's going to be a large 3-row SUV designed for families. Timing-wise, they're planning to unveil it in Q2 2025 and officially launch it in Q3. For context, Anvo just launched their first model that we all know, the L60, back in September of 2024. That's a 5-seat mid-size SUV that's already gained significant traction with 26,673 deliveries since launch, including 5,912 in January alone. What's particularly interesting is how NIO CEO William Li described the L90 back in September. He described it as a revolutionary product that would surprise consumers. In a November earnings call, he clarified that Anvo would launch two models in 2025, SUVs, the L90 we're discussing right now, plus a large 5-seater SUV later in the year. From a competitive standpoint, they're positioning the L90 to compete with Li Auto's two models. That'll be Li Auto's L8 and L9. Earlier industry rumors called this model the L80, but it is confirmed to be the L90, and that suggests that NIO might even be positioning this vehicle even higher in the market. So the strategic expansion makes sense. NIO is trying to capture more of the premium family SUV segment, where Li Auto has had tremendous success. The 3-row layout addresses a specific need in the Chinese market for larger family vehicles, and it showcases NIO's commitment to diversifying their product portfolio. Now let's shift gears and talk about what might be the most dramatic comeback story in the EV world. XPeng. The numbers speak for themselves. XPeng delivered 30,350 vehicles in January, which was a staggering 268% year-over-year increase. That performance put them back on top of China's new electric vehicle manufacturers' sales chart for the first time in 30 months. But what makes this fascinating isn't just the numbers. It's how they got there. XPeng was literally on the brink of collapse back in 2022 with a disastrous G9 launch. For those who don't remember, that launch was a complete debacle. Confusing pricing tiers, essential features sold as premium options, and fierce public backlash that tanked their stock by 15%. overnight. The company's internal governance was also chaotic, departments working independently of each other, decision-maker paralysis, and no one championing consumer interest. Their stock eventually fell 80% from its peak. Here's where the story gets particularly interesting. The CEO of XPeng eventually initiated a complete overhaul, an organizational overhaul. He brought in some veterans like Wang Fengyang from Great Wall Motors as his right hand, and what followed was nothing short of a corporate revolution. They consolidated their fragmented sales channels, they drastically simplified their product lineup and configuration options, launched an internal anti-corruption investigation that uncovered a bunch of supply chain issues, and they replaced most of the company's organizational executive team. Only 2 of the people on that team from when the company IPO'd remain out of 12. So the results, they speak for themselves. The G6 launch in mid-2023 was a strategic pivot for XPeng. It prioritized value and sales volume over technical perfectionism. With competitive pricing at 210,000 yuan, long range and intelligent driving features, pre-sales orders exceeded 35,000 units. But their masterstroke came with the Mona MO3 that launched in August 2024. Acquired from Didi's car manufacturing business, XPeng turned this vehicle into a value proposition that shocked the market. Advanced intelligent driving for just 119,000, about that price yuan. Within 48 hours, they had over 30,000 orders, forcing multiple production capacity expansion. These bold moves completely reversed XPeng's trajectory, increasing monthly sales from 10,000 units to 40,000 units at their peak. What fascinates me about this turnaround is how it required He Xiaopeng to transform not just XPeng as a company, but as a leader himself. He had to abandon his hands-on management style, take control, make tough decisions regarding personnel, and prioritize execution over technical perfectionism. Let's round out our industry analysis with what might be a great development or interesting development, however you look at it, for the broader market in general. BYD's aggressive democratizing of intelligent driving technology. On February 10th, BYD announced that they were equipping 21 new models with their new Eye of God smart driving intelligent driving technology, including vehicles priced as low as 70,000 yuan. That's about 10,000 US dollars. But anyways, this is a game changer. For context, high-speed navigate on autopilot was only standard on vehicles priced around 200,000 yuan, with City Navigate on Pilot only being reserved for vehicles priced at 250,000 yuan. That's 28,000 and 35,000 dollars for conversion purposes. BYD's move essentially cuts the price for advanced autonomous driving features by more than a half. So how did they achieve this? Well, there's several factors. Number one is they've got in-house development for core components like domain controllers, chips, and sensors. Strategic partnerships with companies like Horizon Robotics, Momenta, and of course Bosch. 3, they've got massive engineering resources, thousands of engineers constantly working on these things. And 4, and finally, is cost optimization. Their Eye of God platform is costs a lot less than the industry standard. It's about 4,000 to 5,000 yuan versus the industry standard of 6,000 to 7,000 yuan. According to industry reports, BYD's chairman has made intelligent driving a priority, even reportedly calling his technology chief at hours like late midnight to discuss implementation details. So this equal rights for intelligent driving strategy has triggered a response from several companies, including Shangan, Geely, and Chery. But the real victims here are not EV companies. They're the traditional automakers. And really by that I mean traditional vehicles, those that use internal combustion engines, especially the joint venture brand. Here's why it matters. After pushing the new energy vehicle penetration rate from 27% to 50%, using aggressive strategies in 2023 to 2024, BYD faced a slowing market. January 2025 showed new energy vehicles at a 41.5% market share, down for the 5th consecutive month. Traditional manufacturers had been clawing back at market share through price cuts, while some consumers remained a little bit hesitant about making the shift over to EV due to current concerns like charging time and range anxiety. BYD needed a new angle of attack, and democratizing intelligent driving does just that. Fuel vehicles face structural challenges with implementing the same level of autonomous driving that you can get in an electric vehicle. Insufficient electrical systems, complex mechanical structures, and of course slower response times. So by making intelligent driving a standard at mass market price points, BYD has created what they call the dual generation gap of smart plus electric, something that's going to further marginalize fuel vehicles. So what does this mean for the EV market in 2025 and beyond? First, we're seeing clear segmentation strategies. NIO's doubling down on the premium large electric family SUV market, challenging Li Auto's dominance in that space. Their Envo L90 launch demonstrates that NIO understands the need to further diversify their product offerings to capture a bigger market share. Second, XPeng that has proven that organizational restructuring and market position and proper market positioning, I should say, can resurrect even the most struggled EV maker. Their shift from technology first to value first has definitely resonated with many mainstream consumers, and the proof is in the sales numbers. The Mo3's success shows that there's massive demand for affordable intelligent driving vehicles. Finally, BYD's democratization of intelligent driving creates a completely new dynamic in the electric vehicle landscape. Premium brands like Tesla and Huawei now have to work hard to justify their higher prices, while traditional automakers must work hard to kind of play catch up. Sounds like something that they've been doing since the start of this race, to just kind of expand and build upon their intelligent driving offerings so that they can compete with BYD per se. For investors, there's a few key considerations in my opinion. Scale and vertical integration remained key advantages. BYD, for example, is a company that has control over their supply chains, so they can better withstand margin pressures. Two is that brand positioning matters. Companies need to have clear value propositions that resonate with the market as it continues to segment. Three is that organizational agility is key. Take XPeng, for example. Their willingness to completely reinvent themselves proved decisive. As a NIO bull, I'm encouraged by their strategic expansion through Envo, but I realize that they face fierce competition from other players in the market as well, that being Li Auto and value oriented manufacturers like BYD and XPeng. The next few quarters will reveal whether NIO and their Envo L90 can actually deliver the revolutionary experience that William Li, NIO CEO again, promised, and whether they can maintain momentum in an increasingly competitive market. That's it for today's episode of the Courtside Financial Podcast. It's Friday. Need to get out of here, but I hope that you guys really found this episode insightful, useful, at the very least entertaining. Spartans play today, go green. But if you found it to be any of those things, make sure that you hit the like button, make sure you hit the subscribe button, leave a comment down below, and we'll catch you in the next episode of the Courtside Financial Podcast. Thanks for watching. Goodbye. Obi signing off.